Hi traders, so in our previous video we looked at the price direction and trade management of this trade. However, I did mention about risk management of this trade and why this trade is not the usual type of setup that we take. So we'll explore all of that in this and more in this video. Hi traders, thank you for joining the Master the Markets team today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Thirunapan here, founder of Master the Markets, Elite Conference and the Traders Open Day. So here we are on this trade, as I mentioned. We are going to be looking at what is really not right about this trade. Yes, it did go on to make money, but it's not a usual setup. The first thing to note is that our usual setup is usually one where it closes, actually not closes, but it breaks through the upper stretch line, but then makes a primary. This is what we call a primary, okay? Now, however, this didn't make a primary. It was just one bar retracement, and which we call a PSWB, a potential swing bar that could reverse.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
After which, we had a complete reversal where it just went up in our favor towards our target. Okay, as you can see over here, let me just forward it by one, as you can see like that. Now the point is not that it went in our favor. Now we have to see that this was not our usual trade setup. Okay, now what do we then do in terms of risk management, and why are we saying that? The first point is that in terms of price action setup, it was not our usual setup. Okay, so we're taking against that first, because a usual price action setup is a primary retracement. That's point number one. Point number two is that if you look at the higher time frame, at the moment this is a uptrend. Okay, now in an uptrend, I remember always I tell all the clients, an uptrend is not about comparing between two bars. Now that's a wrong way of looking at it. Now an uptrend is where you actually observe over a cycle like this, right? And once something has got a higher high in terms to a reference high, then it's called an uptrend. Okay, so that's point number one. Our smart money indicator already does that. It compares between cycles. So if you look over here, this is what we call a variation 5 uptrend. There are 6 variations altogether, which we teach all our clients as well to give you absolute clarity in the markets. Now, this is firstly an uptrend. However, in a cycle, remember that in an uptrend even, there's two phases, right? There's the upside and then the downside. That's how turning points are created.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Now, whenever the upside, if it's in line with the trend direction, that means now it's up, isn't it? So the upside of the cycle is also in alignment with the trend. If it's in alignment with the trend and direction of the trend, then it's called phase 1. Phase 1. The opposite, the counteractive direction compared to the direction of the trend is called phase 2. Okay, phase 2. Now you guys go ahead and think about what direction is the daily under at the moment. So this one here, right? This one here, let me just expand that a bit. So over here you can see from this top, now it's coming down. So what would you say? Is this a phase 1 or a phase 2 of an uptrend? Okay, as some of you have already discovered it, that would be actually the phase 2. So it's phase 2. Now it's all very easy to see that because we've quantified the tops and bottoms. So it's very important to quantify your tops and bottoms. Very, very important. That's the first primary thing you need to do as a professional, which was taught to us by institutional quant traders. Now in this top to bottom, this is a phase 2. So phase 2 momentum is towards the downside, okay, towards the downside. Now therefore when the lower time frame is signaling something towards a upside, okay, upside, now the BRO you're saying is going to go towards the upside, but here the trend, the correlation is towards the downside. So there's a miscorrelation here between the 1 hour and the daily, unless you're looking to capture a bottom and you think that this is going to supersede then. Okay, now regardless, some of you might be saying, oh, but Thiru, but this is just for 1 bar on the daily, right? You're just looking to capture 1 bar range and so forth. Yes, that's true. But of course, remember that the higher time frame momentum can also affect the smoothness on how the range is formed, right? So considering that one point was the price action setup was not our usual setup. Second is that the higher time frame is not correlating. I'm taking basically a bottom to plan out and therefore aligning myself towards that. And on the other hand, usually it's very rare that the confirmation bar itself become a bottom turning point. I still feel there's more open equity towards the downside here. So in terms of all of that, there's a mismatch to a higher time frame as well. What are the different ways I can do my risk management so as to reduce my loss? Firstly, I won't put my original 1% risk. I will reduce that. I'll reduce that to 0.5% or even down to 0.25% because two factors were not in my favor this time. Price action nor was the higher time frame to my favor. Okay, so because of that, then I will then reduce it probably to 0.25%. So even though we did win in this trade, that's not the point, but the point is to see what the risk was, okay, and that was not to our particular setup, and that's why we will reduce the risk because we are thinking cumulative, not just of this one trade. In part 3 of this video, I'll be looking at more of cumulative and what we mean by the edge of a strategy. What we mean by the edge of a strategy. Alright, so I guess that's pretty much that from this video. Reflect on the points that you have taken away from here in terms of when a setup is not actually a setup that you're looking for, but you still want to take it. Reduce your percentage risk, and how should you reduce the percentage risk is what we explain in this video. Alright traders, that's all from me on this video, and till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.